Hello, my name is Alan Kian. I'm a certified general accountant and the founder of Alan Kian CGA Professional Corporation. In this presentation, I will talk to you about tax in Canada. Tax serves as a tool in the hands of the government to implement fiscal policies. It is done through introducing some venues for individuals and entities to reduce their tax liabilities. These venues exist for both employees and business owners. I have divided this presentation into 5 topics: tax and government policies, employees, sole proprietorship, corporations, and trusts. Before proceeding, let's define some commonly used terminology. Taxable income. Some incomes are not subject to tax, such as lottery, and some incomes might not be fully taxable, such as dividends and capital gains. Deductions are the expenditures that are deducted from income in calculating taxable income, such as business expenses. Tax credits. These are the amounts that are deducted from taxes payable. The distinction between deductions and credits is that deductions are deducted from taxable income, while credits are deducted from taxes payable. Therefore, tax advantage of deductions is more than credits. And finally, trusts are arrangements made by a person for the benefit of beneficiaries. This person will assign a trusted executor to implement the arrangement. The first topic is tax and government policies. The government uses the tax money or the country's wealth to promote or stimulate certain activities such as job creation, encouraging research and development, training, education, or even supporting some social benefits such as healthcare. Also, tax policies are used to attract public support for political parties, such as home renovation tax credit. As a taxpayer, you want to take advantage of these tax policies, and you need to be familiar with them. The second topic is employees. In most cases, available deductions for employees are limited to RRSP, professional membership, childcare, and moving expenses. On the other hand, the government offers numerous options with respect to claiming tax credits, such as basic personal amount available to everyone, spousal amount or equivalent to a spouse, children under the age of 18, charitable donations, medical expenses, public transit, children's fitness amount, adoption expenses, disability amount, tuition fees, dividend tax credit, foreign tax credit, donations, political contributions, provincial tax credits, which is mainly property tax credit and sales tax credit, and even more. Please note that you do not need to know the details of calculations behind the above credits. Computer tax programs make the calculations behind the scene. The third topic is sole proprietorship. All the deductions and credits mentioned in the previous section are also available to sole proprietorship. Additionally, the owner of a sole proprietorship might claim expenses incurred to earn a business income. You might want to discuss available deductions with your accountant. Let's talk briefly here about partnerships. Partnerships can be owned by individuals or corporations. Generally, a partnership will have tax attributes similar to sole proprietorships or corporations forming the partnership. Special rules apply to partnerships when transferring of a property to a partnership, admitting a new partner, withdrawal of a partner, dissolving a partnership. It is advisable to see your accountant if intending to undertake any of the transactions mentioned above. The next topic is corporation. The question here is, should you incorporate your business or not? The decision should be made in the lieu of advantages and disadvantages of corporation pertaining to your particular financial situation. So you should talk to your accountant before proceeding. Some of the benefits of incorporating are lower tax rate, possible income distribution within family, capital gain deduction for owners of qualified small business corporation. This deduction is limited to $750,000 capital gain, and various tax planning options, which requires a financial planning by a tax expert. The last topic is trusts. There are two types of trusts: testamentary and inter vivos. A testamentary trust is a consequence of the death of an individual. Inter vivos trusts are created by a person during his or her lifetime. Some of the benefits of trusts are income splitting, protection of assets from creditors or even from some family members. A trust may also substitute for a will. Trusts are complicated tools and can impose a high legal cost. Please discuss with a lawyer as well as an accountant before creating a trust or filing with the Canada Revenue Agency. Let's summarize our discussion. The government uses tax to implement fiscal policies. Additionally, political parties use tax for increasing their popularity. Employees need to be aware of available deductions and credits to minimize their tax liabilities. Business owners need to do proper planning and compare tax advantages available to them through sole proprietorship, partnership, and corporation. Trusts are extremely useful tools for tax planning among family members and can substitute for wills. If you have any comments or require some information, please visit my website at www.accountingottawa.com and contact me either by email or phone. Please also see my two other presentations posted here titled Simple and Accurate Bookkeeping for Small Businesses and Financial Planning for Business Owners.